Is $24 for XRP within 60 days a realistic target? Yes, you heard that right. But where does this number come from? A new ETF wave has started in the crypto world, and an analyst named Diana has presented a math-based model. This model shows how institutional capital could flow into XRP and potentially explode its price. Franklin Templeton starts trading today. Bitwise comes tomorrow. Grayscale, Wisdom Tree, 21 shares, all lining up. So what happens if this many ETFs enter the market at the same time? Today, I'll break down the on-chain math and institutional mechanics most investors completely miss. To avoid missing analyses like this, don't forget to like the video and subscribe to the channel. Now let's get to the real topic. Diana's model is built on a simple but powerful logic: the collision between liquid supply and institutional demand. There are currently 60 billion XRP in the market, and the price is around 2.4. The model assumes that 5 to 20 ETFs will launch, and each will bring between $10 million and $45 million in capital. When this capital enters, it pulls tokens out of the liquid supply. As supply shrinks, price rises. Basic economics. But here's what most people miss. If ETFs launch simultaneously, the supply shock multiplies. In the first 30 days, the targets range from $4.5 to $15. In 60 days, the range expands to $7 to $24. These numbers vary depending on how many ETFs launch and how much capital they bring. So, is this many ETFs really coming? The answer is clear: yes. Rex Osprey and Canary Capital are already trading and attracting capital. Franklin Templeton started today on CBOE. Bitwise is listing tomorrow or the next day on NYSE. 21 shares and CoinShares arrive on November 20th, 22. Grayscale and Wisdom Tree enter the market on November 25th. These aren't just names. Each is a massive institution managing billions. Grayscale has experience with Bitcoin and Ethereum ETFs. Franklin Templeton's crypto strategy has been maturing for 3 years. If these firms enter the market in the same week, they create a serious demand surge for XRP, because all of them must source tokens from the same liquid pool. So what happens behind the scenes under this type of pressure? Most analysts ignore this. Now we get to the deep part. On-chain data shows that large wallets have been accumulating XRP in recent weeks. The amount of XRP on exchanges is dropping, meaning investors are pulling tokens off platforms to hold. This behavior usually appears before major price moves. Also consider this: ETF issuers may pre-arrange OTC deals before buying from the open market. In that case, spot liquidity tightens even further. Diana's model factors this in. If 15 to 20 ETFs actually launch, and each brings around $25,030 million, a total demand of $300 to $600 million forms. This is enough to absorb a few percent of the 60 billion token supply, and that can produce a 300–900% price impact. So what risks should be watched in this scenario? The 60-day window is critical. If ETF inflows fall short, or market liquidity ends up higher than expected, the targets may not hit. But all signals right now are positive. Institutions are ready, the timeline is clear, and on-chain data is strong. Which detail do you think stands out the most in this analysis? Can XRP really hit $24 in 60 days? Share your thoughts in the comments. Don't forget to like the video and subscribe to the channel. See you in the next one.